Okay, here we are in the
Crazy
new
week.
episode.
Yeah.
Wow, this was a crazy week. Yes. And I think we have a lot of stuff to discuss. Silver has fallen 38% yesterday, and this entire week has been amazing. Or not an amazing, I think amazing for the bears
Yeah.
because not for me. And the market has fallen drastically. But what are we really doing? And what should people do is something that we are going to explore in this episode.
Yeah.
And let's find out. And just to start with, so this week was also essential because some of the biggest companies in the AI world have had their earnings this week. And
Right.
we'll just touch upon some of those companies and tell you some of the highlights that these companies reported.
Yeah.
So let me actually get started with Microsoft, which is one of the biggest cloud players in this AI world. Microsoft has recently updated their earnings. So just want to mention that overall all the numbers were really good, right? But uh, there was one number that led the market to freak out, and that led to a 10 to 12% sell off. And that is usually does not happen to stocks like Microsoft, right? Because it's a very
Mm.
reliable name in the industry. But basically, there is something called as an RPO in cloud. Basically, what does an RPO means is that this is a revenue that has been promised by companies that they might realize in future, right?
Mm.
And Microsoft has about $625 billion of RPO. Now, in this earnings, they released that 45% of that RPO still depends on OpenAI.
Mm.
Now the market, and this is the same thing that has happened with Oracle as well, right? Oracle is
Yeah.
in even further problem because they have a lot of debt, but the market is sensing that OpenAI is not in a condition to pay this money to none of its vendors, right? And that is what is getting priced in, that if $350 billion of your RPO doesn't get paid, right, then should we actually price or give that multiple to Microsoft, is what the market is asking.
Because OpenAI's revenue was $20 billion as far
20
as I
billion
remember.
dollars when they last reported. Yeah, let's just assume maybe it's a like maybe 25 right now, but even then 350
12.
billion dollars, obviously that's across few years, but
Yeah.
even then it's a huge amount. And please note that Microsoft is not the only one that they have committed this revenue to. As I said, they have about $300 billion committed to Oracle. They have a few $1 billion to Broadcom, etc. Right? There are a lot of commitments floating around. So the idea is that will OpenAI will have so much capital to commit or pay down to these companies. If not, then should these companies, or should you even account for these revenues coming to these companies?
Yeah.
So that's the fundamental thing. But apart from that, if you see, the cloud grew 39% year on year, and every other segment for Microsoft Office, etc. Did really well and grew. So in terms of their core metrics, the company is doing fine. They beat on EPS and revenue, but it's just the RPO thing that has created a narrative, not only on Microsoft but other players that are related to OpenAI. So just want to tell to investors that any company that is heavily dependent or correlated to OpenAI, you might want to not put all your eggs in those companies.
Be cautious and diversify.
Absolutely, absolutely. On the other hand, we had another great company which I have a relatively, which holds large part of my portfolio, is Meta. Very bullish on this company. And just after reporting earnings, which was a phenomenal earnings, by the way, they
Yeah.
beat on EPS. And as you can see, the EPS expected was 8.8, but they reported 8.88. The revenue expected was $58.47 billion. They reported $59.8 billion. And on all other metrics, right, the monthly active users, daily active users, all metrics are upright to the north for Meta. The important aspect being that this is one company that is already monetizing AI. And Mark Zuckerberg, in their calls, was reiterating the fact that their algorithm, which is obviously driven by AI right now, is becoming so better with time, that they are able to keep people longer, or make people spend more time on reels, etc., and more time spent directly correlates to more purchases, right? And that is where Meta kind of gets their money from. So all those metrics were crazy for Meta. One thing Meta did say that, again, investors did feel initially. So initially, when they reported earnings, the stock fell down 5%, and then from there the stock moved 10% positive. But is that they have increased their capex guidance, right? Which was initially supposed to be, as you can see, initially supposed to be around $90 billion, which they said that they want to spend about $135 billion. So good for the Nvidias, good for the Broadcom of the world, good for AMD and stuff like that, because all this money is going to flow into the chips.
I
So
also read somewhere that apparently their whole ad system is benefiting a lot from AI. So it's
absolutely.
becoming much more efficient. So I really hope they pass the benefits to the customers as well by lowering the costs of their ads.
I don't think so. They will do that, but and maybe as a shareholder, it's good for us, because that will
Mm,
flow to the company's bottom line, and
mm,
the stock will see the rewards of it. And one other thing is that the biggest loss-making division inside Meta is Reality Labs.
mhm,
Right? If people remember, in 2021, everybody was chasing this metaverse idea, and the company got renamed from Facebook to Meta.
mm,
Is still the biggest loss-making division, and Mark said that this year is going to be the year where that loss will peak, and the losses will reduce from there on, right? If they have to cut people's expenses, they're ready to do that, which I think they've
mm,
already done to an extent. They're not going to invest any more money in that. And let's see, the products that kind of come out of that. I think the specs or the glasses, Meta glasses,
mm,
that they are building, is kind of a product of that division. But obviously it's still not justifies the investment that the company's already done. But let's see. So basically all the metrics for Meta, at least look like they are really good, and should only be increasing in
mm,
2026. So yeah.
mm,
Very quickly, I will just cover Apple as well. So Apple, again, they had a phenomenal quarter. Apple, for people who don't know, has not seen a great revenue increase, for a longest time. But obviously, iPhone 17 has been a hit for them, and that has led to a great revenue jump. I want to show a graph.
I think you had also mentioned about this record iPhone sales a few episodes earlier as well.
Yeah, that is a bet that I wanted to take on the Apple, because I was already seeing that the sales are increasing. So just this view. So this is a yearly graph for Apple, and if
Mm,
you see here, at least, right, the sales overall revenue has been pretty stagnant, right? But you
mm,
see this jump, right? Actually, I'll move my cursor. You see the jump from 2023, 2024 to 2025, right? For a
mm,
company, again, people can say it's more or less, but for a company that's about I think about $4 trillion, that's
mm,
quite a considerable jump.
mm,
And they have said that they are uh, getting a lot of people from Android to switch to iPhone, and they had great growth, double digit growth in China and India. So I think for the other things of Apple, I think the increase, if revenue will be incremental for them, with respect to iPhone and MacBook sales and stuff. But I think on-device AI is going to be a next leg of growth for them, because they have already taken a great decision to choose Gemini, and I think agentic workflows, etc., are going to come to Siri very soon, and that will make a lot of people move from Android to Apple, and make a lot of old Apple customers to switch to new Apple phones. And I think that's going to be a big growth lever for Apple.
So then I think next week we are awaiting earnings from Amazon, Alphabet, AMD. and also the
Yes.
jobs report is about to come. So
Yeah. So also in this earnings season, I saw a very important theme playing out, and I just wanted your views, Rohit, in it. That
hmm,
there is a segment of the companies that are back-end players in the AI infrastructure play, right?
yeah,
They reported crazy earnings, like ASML reported crazy earnings, Celestica
hmm,
reported crazy earnings, right?
hmm,
Everybody, that in some form or ways associated with the AI infrastructure play, right?
yeah,
But there is this other set of companies that are SaaS companies, which were, the favorite child of the Wall Street for the last 10 years. They are getting decimated. If you
yeah.
talk about ServiceNow, you're talking about Salesforce, you're talking about Snowflake,
Hmm.
any of these companies. So what's your view on this? Do you see a multiple compression for the SaaS companies, or how should an investor place themselves or place their bets today?
So what I'm seeing is that there are a lot more companies like that day I shared one Japanese company with you, which is making that optical cloth which is required for like all the chips to be manufactured, and that is like the only company that's doing it.
Yeah.
So, but the minimum investment to be able to invest in that was $10,000. So I haven't done that yet.
It's
But
listed on
yeah, like
Japanese stock exchange.
Japanese stock exchange. Yeah.
Yeah.
So what I'm feeling is that trends are coming and going quite fast. Like the memory trend came, and
Right.
then after I think this week it might be slowing down because we had a huge fall in Micron and
Yeah.
SanDisk and stuff. So uh, I feel like we might have more shorter cyclical plays like in different segments of stocks that are related to AI. So I think like memory had a good run. Let's see like how it does going forward, but I have a feeling that like technically the last 2 days don't look good. Like the last scandal, Friday scandal, was horrible. So
Yeah.
we it might be like the start of the end of the rally. So let's see how it
Right.
goes. So yeah, like figuring out these trends and catching them early on is the way to go in my opinion. But yeah, it'll require you to be like on your toes all the time. Or if you still want to invest fundamentally, then I think memory plays would are still good fundamentally. They are not uh, at extremely high PEs yet, but yeah, they're reaching there. So yeah, I think we can use
Yeah.
those kind of methods.
With memory, so basically, just for viewers, I'll just explain that. So some of the stocks like Micron, Western Digital, SanDisk, Seagate, right,
Mm.
that are listed in the US stock exchange, just go and check out their stock charts, right?
Last couple of months.
Last couple of months, or 2025, these all these stocks were the biggest gainers, right?
Yeah, yeah,
Upwards of 150 200% just in one
yeah.
year, right? Primarily, you have to understand why these stocks ran so much, right? So let me explain memory. So whenever, what we have seen is that a lot of these LLM models are becoming thinking models over time, right? And for them to do inference over a long period of time, they need memory,
Yeah.
right? And we now know for a fact that a lot of these agentic workflows are going to take over, right? That's going to be the future in 2026. And for that to take place, there's a lot of thinking and action that needs to take place, right?
Yeah.
So for that, memory is going to be very essential. But what has and that's one primary thing that why Micron has been running. And primarily, there are only three companies in the world that produce 90% of memory these memories. One is Micron, one is SK Hynix, one is Samsung, right? And on US stock exchange, you can only trade Micron. That's the reason for Micron's bullishness. But even after this 200% run, I think the company right now is at a 13p forward p,
Mm.
right? I'll just explain the fundamental of why they made it till here. Then there's Western Digital and all these Seagate and all that. They primarily produce solid state drives and HDDs, right? SDDs and HDDs. If you guys buy laptops, you might understand the difference between these, right? Largely, all these LLMs work with a lot of data, right? and there's requirement of real-time data movement, for which you need SDDs because they are really fast. And when you're done with, or when you want to train a model, and after you're done with training, you obviously want to back up all of that data somewhere, right? For that you
Training
need
data.
HDD, because you don't need to recurringly
Access it.
interact with that data, right? And that's why you need Western Digital's HDDs, right?
Mm.
And again, all of these companies, if you see a common theme, they have said that, our we can, there's more demand than we can supply. We are sold out till 2026. And by the way, Western Digital and Seagate had their earnings this week as well. Both of these companies CEOs were like, bro, like we are, sold out, everything is super bullish and stuff
Mm.
like that. Just in January, I think most of these companies have done around 30-35%.
Mm.
I've personally invested a small chunk in them. I'm up moderately about 25% in these stocks. But the point here to be cautious is that uh, the stock has already run 250% now, right? Or
Mm.
200% now. And
Mm.
primarily the, the, the things that these guys produce is a commodity. So if, let's say, this is the threshold of all of, if Micron produces more than this much memory chips, then basically they will not have the negotiating power, because there's more supply than there's demand, right?
Mm.
Let's say right now they are here, and you have to be aware of the fact that if this level of production crosses, then suddenly the stock will see a great fall, right?
Mm.
And that is why this market is still not giving them a premium of, let's say, 20p or a 25p. The stock has
Mm.
never traded at that p, almost never,
Yeah. Yeah.
because it's a cyclical stock. So if people invest, just be aware that you're investing in something that's cyclical, and if you do, watch it like a hawk.
Yeah.
What
Yeah.
Watch what other people are saying,
Mm.
and be careful.
Yeah, I think one more reason why they're in so much demand is because till now short form videos we were able to get using Gemini and stuff, right? Eight
Yes.
second limit and stuff. So eventually we are reaching a point where longer form videos we are able to generate at once. So the requirement is going to explode like anything. And this technology is not something, that they're not doing anything groundbreaking as such. If, like, let's say a Google wants to replicate it and start producing their own memory, they might be able to achieve in let's say 2 to 4 years.
You're right.
So that is another thing. And this also tells a lot about, how the market is right now, how volatile the market is. Even though these companies, these memory companies, reported such good earnings, they fell drastically as well along with the rest of the market.
Yes.
So even like Mag 7 companies, or be the memory companies, or the metals, they all had like a horrible, horrible fall.
Absolutely.
So,
And that's very critical, actually. That's a good point that you raised, Bhaiya, because when the market falls, right, I think for me, it becomes a good opportunity to identify companies that really have a moat,
yeah.
right? If your stock is falling 50% or 25% in a day, and
Yeah.
buyers are not coming to buy that stock,
So,
maybe it was speculative all along, right?
yeah.
And maybe the stock actually did not have the moat that you thought it would, right? Or by
Yeah.
chance, let's say, if it falls, right, and you think all the fundamentals are in place, then that's the time to buy heavily into
Yeah.
the names. Like, for example, I have some names which I thought unreasonably got belted in this sell off, and for no mistake of theirs, they actually, some of these companies have nothing to do with the AI bull run. Their business is just completely different business, but like when everything falls, right?
Yeah.
And so those are some of the names that I have in my watch list, looking at them, and would want to build positions in them. But just wanted to touch on the SaaS names as well, right? So
Yeah.
SaaS primarily was a great business model, right, for the last 10-15 years, because fundamentally they sell you subscriptions per seat, right? Their enterprise model is per seat, right? So let's say,
Yeah.
for example, if I'm buying Snowflake as a company, I'll have to pay for per seat per employee that uses that, right?
Yeah.
Or let's say ServiceNow, etc., right? And these companies had about 30, 40, 50p ratios, because the income was always recurring, right? If you lock 100 seats, that 100 seats ka paisa to aayega hi aayega. But plus on top of that, you'll make, more money as in when you close new contracts. Now here is where the market has, or the narrative is that with the advent of AI, these enterprises will be able to code their own CRM. They will be able to code their own whatever, like AI chatbot. They'll be able to code their own HR software and stuff like that, and they'll not be using these softwares. I primarily feel that there's some truth to it, but I think people are exaggerating. And if you see some of these companies, they are almost 50% below their highs, right? Again, I'm not like the rational part of my brain says that, just because something has fallen 50% doesn't make it, valuable. That's not the logic. But there is no fundamental change in the earnings of these companies. Like, for example, ServiceNow reported earnings this week, and they are saying that our revenue have increased, our EPS is better than the last time. And this whole narrative of AI will, like, somebody will code a software that will replace ServiceNow is not happening on the ground. This is just a narrative.
It'll take a long time to
It'll take a long
reach
time.
anywhere close to
And I feel it might not happen because it is not just about making the software, it's also about maintaining the software.
True.
And there's a lot of data that already exists on ServiceNow, right? And bigger enterprise like Deloitte and all, they're not like, I'm not saying they use ServiceNow, but they're not going to be like, what, I'm going to save these millions of dollars and I'll remove service, I'll build my own software. I'll now suddenly, build a coding team, and that they'll start building it. Just doesn't feel right here. But what I feel is that this sell-off in SaaS is going to create some insane opportunities for very selective names where we feel that they're actually a moat. And the things that they are doing cannot be replicated by just prompting.
True.
And if people who can identify that, they'll be rewarded heavily, I feel, in 5 years.
I've seen some people recently taking bets on ServiceNow companies like that, SaaS companies. And I also feel that the market is sort of maturing, even with the AI narrative. Like, people are starting to see beyond just the AI talk. They want to see actual numbers and revenue getting increased, and
so true.
Those kind of things. So yeah,
that has been the problem with OpenAI, right? Like, initially everybody's like, oh god, this tech is going to change the world. Right now it's been 2 years. I was like, bro, I mean, maybe the world has changed, but where's the money? You're still making $20 billion and your valuation is $850 billion.
That's crazy.
That math is not mathing anymore.
They're looking to raise 100 billion more.
100 billion more. Yeah.
I read somewhere that they're finding it difficult to raise capital now. So they're like looking at sovereign wealth funds
and now the news is that Anthropic and OpenAI might finally do IPO in 2026, which was not on the cards earlier. But now it is, because just becoming difficult to kind of raise that amount of money in the private market.
Makes sense. So like, let's discuss quickly a few more things, like the Fed chairman, chairperson.
Yes.
So Trump has his nominee clear. It's Kevin Warsh, and what I've heard is, like, again, I didn't know about him earlier, but what I read is that he's not actually as dovish in general as Trump initially wanted. But let's see, if Trump is actually nominating him, so he might actually make him much more dovish than he wants to be. Let's see how it plays out. But like, the concerns about Fed's independence, right, that can have ripple effects across the world. People are they won't have the trust on US dollar as much as they used to have before Trump's term started. I personally,
this is a reason why gold has fallen, because he did not appoint a dovish Fed chair or a puppet, really.
It might be. What I feel is that gold and silver were overextended.
That's true.
Silver has had a bad candle, like, earlier this week. So as I messaged you on the group, that I was getting out of precious metals. So I did that also. There was a bearish divergence on the chart. So like, I got out earlier this week, thankfully. And I feel that these things, right, on the chart, they're looking for like a news to come out so that the chart can make
Can be
sense.
right.
Yeah, it can
Yes.
technically make sense. So
Yeah.
yeah, like I feel that has happened. So like silver falling 37%, like from the top of the candle to the bottom, it's like a sigma 8, or some people are even saying sigma 10 event. It will happen like once in
Yeah.
a lifetime.
I mean, yeah, and people blame Bitcoin. Like, bro, your silver's falling 37% in a day. Come on.
It's like trillions of dollars of market cap. It's like insane. Like I don't know, like if
What
it
do you,
would
what do you
happen
think
ever
there?
again.
Let's say, so I personally, have a lot of friends who gave into this FOMO and,
Yeah,
went ahead and bought silver. I told them not to, but,
yeah,
they could not control.
yeah.
For them, do you think this 37% drawdown is a buying opportunity, or people should just get the heck out now because now they can?
See, on one side, silver fell 37%. On the other side, gold fell only 14%.
Right.
So I feel like gold is like a much more stable long-term investment, in my
Yeah.
opinion, and uh, that also has to do with like yesterday the DXY, the dollar index rose up. So
Right.
whenever that happens, gold falls. So even after a combination of all these moves, gold only fell 14% when silver fell 37%.
Right.
So, in my opinion, like if I was in their place, what I would do is next week there would be some temporary bounce that would come on silver.
Right.
So, what I would ideally do if it was me in their place, I would take opportunity of that bounce, sell the silver at a relatively higher price, and
Right.
then shift that to gold. And obviously for the longer term, not
Right.
looking at the next month or few weeks or something.
Makes sense.
So yeah, that also reminds me the savvy trader portfolios.
Oh, yes. I think we got hammered
We
the
got hammered. So
last
what
week.
happened is, I'll give a quick brief. So I was tracking it the last few weeks. So at one point I saw that your portfolio was up around 2% and my portfolio was up around 10%. But obviously I had like some metals and slightly riskier plays as well. So
Yes.
now after the market has come down, yours is up 2.54% in the last 30 days. Mine is up 3.88% in the last 30 days, but mine has come down drastically. So yeah.
Yeah. I think uh, uh, that we should also look at adjusting our positions like mutual fund owner would do
Mhm.
uh, maybe once a month, and then
Um,
maybe track our performance over a period of a year, because I'm not
let's.
so confident about my positions anymore. Like, basically, I'll tell you my honest opinion is that I
Yeah,
feel that there are much better opportunities now that I
yeah,
have
yeah.
taken. I have actually
True.
acted upon those on my actual account,
Yeah.
but I can't do it here because we thought that maybe we'll stick with it and stuff like that.
So let's
So
make
yeah,
it interesting. Let's place some limits or something. Maybe let's do it
I'm
like
saying you can do it only in a month, and you can only change, let's say, three names or maybe two names, whatever.
three will be too much. I feel one
Two,
or
two,
two.
two names, two names. Give me two. I know exactly two that
Okay.
I want to move out. So
I
yeah.
think so. For the first month, and since so many things have gone up and down, let's do it too. Let's
Yeah,
revisit for next month at the end of next
sure,
month.
sure. So I
Maybe
think I'll
maybe
update
next
and
month next time.
yeah, I'll update it today, and then next time
Hmm.
we can kind of discuss. But let's do our updates today only.
Yeah, this weekend anyway. Like
Yeah,
I'll be off
correct.
for the market,
Before the
so
market reopens. Yeah,
yeah, let's do it this weekend. And
awesome.
yeah, I also wanted to quickly share some TA. So
Yeah.
the podcast has already gone too long, but let's quickly do it in a few
Yes.
minutes. So yeah, let's start with the big one, silver. So
Wow.
since waterfall, right? We'll
I
just
mean, I
put
can't believe this is a chart for silver, man. Like,
yeah,
oh God,
it's like some
like
altcoin, crypto altcoin,
altcoin, man. Yes, like penny stock. Oh God,
37%.
can't believe it.
So, what was happening since a long time is that silver was making all-time highs one after the other, and
Hmm.
we did not really have too many points to be able to draw support, resistance, and stuff.
Hmm.
So, yeah. after this fall, I think we do need to, and I think this would be like the first support area
Hmm.
around 82, from 70 to around 82. And
Okay.
yeah, if you see, it has bounced right from this area.
Hmm.
So I feel this will be an area where silver could consolidate, and
Okay.
if dollar keeps rising, it might touch this area. And if you see, like, it has some October highs and November highs, and it got broken. This point got broken in November, end of November. So yeah,
Right.
this could be like a second area, which would be like a very good buying opportunity if we reach there.
Right.
But yeah, let's see. Then let's see SPX. So XPX again, I had drawn that channel from this blue channel is from the COVID lows.
Right.
I'll quickly show. Yeah, from here till
Right.
here. So
Yeah.
we've been
And it's been
moving in this
this
channel.
channel since
Yeah,
COVID.
yeah.
Right.
So like till now, I don't see it getting broken. It has tried breaking out once, and then there's this support from the lows of last year, 2025,
Right.
which you made in April. So this trend line also, if you see the chart, tested 3-4 times, and then it
Yeah.
broke it down, and then it
Yeah.
tried going above it and again got rejected. So again, near term, I'm like, I'll be extra cautious investing in stocks. I feel still might get some more buying opportunities because of this Epstein things, which is a lot of new files have been released. So
Yeah.
next week will be very interesting. I really hope we get some good buying opportunities. True,
So
true,
I
true.
want us to break through this. But
We will most definitely, because rate cuts would definitely be coming, and
yeah.
global money supply is also just increasing. So we'll definitely break through this. But right now, the structure looks kind of weak. So let's
Right.
see. Even the same thing on the Nasdaq, right? This trend line, which is from April 2025 lows,
Hmm.
it sort of tested this trend line 4 times, and then fourth time it broke, and then again it tried clearing that off, and then again it came down. So we'll need to see. That's next week will be interesting. I'm hoping we get buying opportunities. The market falls at least like 3-4%. Let's see.
Right. Right.
Another thing is, yeah, yeah, go on.
Yeah, I was just saying that, I mean, we again have earnings of some important companies next week.
Yeah, yeah,
So
yeah,
slightest of reason, because some
yeah,
CEO said something wrong and stuff.
yeah.
Perfect reason for this chart to
Fall.
complete its prophecy.
Yeah, 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 true. And then yeah, coming to SanDisk, so memory stocks, right? I was just trying to get like a Fibonacci from like the November highs to the lows it made later in November. So even with the fib, like the stock had crossed like the maximum allowed, multiplier, and
Right.
then like I don't know where this will stop. Again, a similar case like silver.
Right.
So I'll be extremely cautious with the memory stock. Same thing with the Micron, right?
Micron.
It
Right.
is crazy. Like we don't have any anchors to say that okay, where could it go up till, or where would it fall? So if it falls, it could be till here 260, but it seems too far fetched. Maybe till here 350. So 350 would be my realistic target. Below that, I don't think the fundamentals would let a stock like Micron go below 350 in the near future.
Right.
But that'll be my buying zone.
Okay, awesome. I think thanks so much for sharing those charts. I think it gives us some sort of levels as to or to rather expect till what point are we going to see a correction,
Mhm.
and if that correction happens, what's a good buying level? Primarily, I think. But what's your overall stance? Like how are you seeing at least the next quarter play out? For the markets.
So it'll be quite interesting because people would be expecting the Fed chairman to change middle
Yes.
of the year. So the next quarter, I feel the markets should go up,
Mhm.
but again, it might go up in pockets. So let's say I don't expect the S&P 500 or the Nasdaq to go up too much,
Right.
But there would be specific value stocks in them, which might go up. So I'll like technically I'm watching this market very closely, and I'm looking for buying opportunities. So yeah.
Right.
One more thing I would suggest is that if you're not able to find good buying areas, you can actually use AI to uh, get into that habit. Ask AI that, okay, I'm looking to buy, let's say, Oracle. So what would be good support areas where if it falls, I could, start buying the
Yes.
stock. So
Right.
yeah,
Makes sense.
that'll be my thesis for the next quarter.
Yeah. For me, it's primarily that I already have start seeing, some opportunities uh, in the market because of the sell-off that has happened this week. And
Mm,
I've started deploying, let's say, 10% of my capital that I wanted to. And I would gradually keep doing so if the market keeps falling.
mm,
So my strategy is basically when there is a huge sell-off week,
mm,
try and deploy some capital, in the market.
mm,
And but my thesis would fail drastically, if we have, let's say, a 2020 kind of event, right? Because obviously I can't foresee that. But
mm,
if not, and
mm,
if it's a correction that has usually happened in the past and something that we have recovered from,
mm,
then my strategy would definitely work, and it has kind of worked for me in the past. Is because find some of the best companies, DCA into them at levels that are pretty good, and then the compounders will do their job. The company will keep on performing. They will keep beating earnings, and the stock will eventually move higher because the market will have to pay attention to their EPS.
I would say bottom line, every investor will need to start putting little more time than they used to
Yes.
because of the high volatility we've been seeing since
Yeah.
Trump got
Yeah. People
Trump
can
became
do
the
that by
president.
watching our podcast, by the way.
Yeah.
I mean, and yeah, I mean, awesome. It was a great episode, Bia. Loved this discussion. Let's see how the market unfolds over the next few weeks.
Yeah, and
Catch
we'll
you again.
make the two changes on our portfolio. So do check that on Monday.
Yes, absolutely. See you in the
See
next one.
you. Great episode. Bye.
Bye.